January 22nd, Wednesday, market analysis. Stan Ehrlich, good morning. We are 9:50 California time, middle of the traditional trading day. We have some very new developments. They're going to turn into be very significant very soon, probably. We have now reached overbought conditions on the E-mini. We hit 75 on my custom ER-RSI scale. When we get to that level or a little higher, and it could last another day or two, we usually start to move back down again to some degree. Just take a look at this horizontal line in the subgraph here, which is a red line at 75. And since, let's say, August, we got barely above and pulled back, and again, and again, and again, and here we are. Now, that only tells us overbought conditions. You're likely to start to top out and come back down some. When and how much? Well, any time now, really, because we were just, nicked overbought. But we frequently get overbought for maybe a day or two, and sometimes significantly more than that, even a week plus. So don't jump the gun. But this is the warning, beginning warning, that we're probably close to in time and very possibly in price. Check the price. Well, we're right now at a previous high back in November, which was already exceeded back in late November, early December for a couple of weeks. But it didn't hold, and it had a sharp break, really sharp break. I believe that was the interest rate situation. And December 18th, and ended up bottoming out in a support area with a signal of mine that worked out for a few days and came back down, did not make a new low, did not make a new high in the next rally, and now we're getting important. It came down and made a new low in a support area and got oversold again. Now, in only just a few days, 1 day up, 2 days up, a little bit lower. 3, 4, 5, 6 out of 7 days now have been up. Or is it 5 out of 6? A lot. And now overbought and at a modestly important resistance area that is a little bit fuzzy. We're a little bit above it, but not much. And any close around or lower than, let's just say 61.22 might not be particularly constructive. And we might start rolling over. But considering it's only the first day and we're not showing any exhaustion strength signs, it's just stair-stepping its way up consistently, then I'm expecting a test of the 61.80 area, the top of the market we had in early December. Now, that's a different story. That could turn into a double top. It's going to get more overbought in the process as long as it goes up fairly consistently for, what do you think, another day or two? That's about all it's going to take. We might get there on Friday or even, who knows, today, but relatively quickly. Then you're going to be more overbought and more likely and at a double top price level. So we're starting to watch for turns down, which haven't started yet. Okay, enough said. That's what I've said applies mostly to the index in a general sense. Now, you can see we're just simply stair-stepping our way up here consistently over the last few days. No sign of a blow off top, no increased volatility. It's just doing it. Now, the spider's a little different. This is the third time the market gapped up. It only trades, as you know, for 6.5 hours, not 23 like the E-mini. And it is almost high and last. It is extremely close to the previous highest high, historical highs on the SPY. It's an ETF. So we have a possible exhaustion gap today, and we could knock up against that resistance level that just a little bit higher. That would bring the E-mini up, of course, a little bit more, but that's only telling me it's getting closer to probably turning. So this could be a key. Watch carefully at 609. I'll tell you exactly. We're looking at 609.07. So call it 609. And considering we're at 7.5, that's only a 1.5 higher. That could happen in an hour. Next, SPY 5 minute. There's your gap this morning. You can see we're extremely close to the high that was made back on December 6th. Next, the QQQs have another gap like the spider, but because it's a 6.5 hour symbol, but it has also come up already to a particularly important level. The previous upward slanted pennant formation we broke out of on a closing basis for really only on this date, December 30th, and worked a couple of days lower and created the second point for the trend line for the bottom of the wedge or pennant, rallied back up, stopped, and confirmed a resistance slope. Going back down, support basically held it and the bottom of the wedge at the same time. Not quite oversold, but close. And now we gapped up, which is now considered a breakaway gap to the upside. And here we have a possible exhaustion because we're now at this resistance line, very close to previous highs and fairly close to overbought at 72.5. Remember, all we got to do is pop up a bit more, and we're at 75 on RSI probably, and that'll be red also, or yellow also. So the QQQ 5-minute getting pretty close. Nothing to sneeze about, disregard. So here we are, NASDAQ futures, no gap, close, but no gap. It's got 23-hour market, of course. So we're at a previous top of some significance, not the highest high, but that was back on December 26th, day after Christmas. And we're there again. And we're very close at 71, let's call it 72. Do you get up to 75 in the RSI? So another little punch to the upside, resistance level, but we could get up more. So there's that old resistance line that we're underneath right now. It had a channel or a wedge gone the way up like the others did or do, and a previous historic high. So we're very close to doing the same thing that I've been talking about this morning, probably reaching some peak from a minor standpoint. But the old saying, the way January goes, the year goes, looks awfully good because the beginning of January, we were trading, where were we? Is this two? Yep. We closed at 21,170-ish. And here we are, a new high for the month since the beginning of the month. Next chart. NASDAQ, 5-minute, doing pretty good. A little too quick, a little too fast, but nothing major. Next, the YM Dow is overbought, and it is approaching the bottom of the old upper slanting channel. Two reasons to believe that about 44,687-ish could be important on the way up, and it stops there or very close to it and turns down. For a minor downside correction, I'm thinking somewhere in the area of 43,500 or a little lower. In other words, a little bit below yesterday's low. By a modest degree. And then back again, up. If we see a correction starting real soon, which is what I'm talking about, and we get the 5-minute chart on the YM. What about the Russell? The Russell got up to a little resistance area. I think I added that this morning because of the way it got up there. I looked across and sure as heck, I found a bunch of highs and lows that turn out to be relatively significant. And here we are again. So it is a small one inside the big giant resistance area. And we did get very, very close to overbought with an RSI high today of 73.85. But it's turned around already and started to slide. Now, it's unlikely that we're going to have an outside bearish engulfing. So it's just started to come down a little bit before the others, I think. Bonds. Well, I'm sorry, the Russell 5-minute, yep, coming down. New lows for this session, but not anywhere near below yesterday's spike low. Okay, bonds. They're dribbling off a little bit today. We're down 14. We are still long from the ER1 long position overnight on January 14th, the low day exactly. Because of the ER3 strategy, ER signals, ER3 version, we bought the exact tick low of the day on January 15th. I believe it's 11:30. Exactly. So that's why the green line from the low of that day. Fantastic. Up, up a little, up a little, up a little, and today's the first day that's coming down some. Deserves a little bit of a dip. Our protective stop is already at around 1217, and we are long from, again, hair under 11. Couple of points plus. Looking awfully good. And I'm not saying we're going to get stopped out. I'm just saying that's our protection at the moment. Now, the notes. Comment. I'm noticing today, because it dipped down some, that it could come back down into this little support area in the next day or two or three or four and turn up good. That'll be fine. Uh-oh, what are you going to do when I tell you the first shoulder low was on December 26th? And then the bottom of the market, the lowest low was, January 13th, and that's fine. And I measured the exact same number of days from the first shoulder to the head, and you come up with 4 days from now. So we are almost in the little zone of time. A day or two early, a day or two late wouldn't change the picture. When, if we bottom out around this yellow zone at the top, in the middle, at the bottom, it will be okay. So all of a sudden, I can draw a little circle in this few days coming up in the yellow zone. And I might do that the next day or so. If we do continue to dip down slightly, that would be the last shoulder low, maybe. And I've already drawn in the neckline. And what I haven't done is drawn in the upside objective, which would be, and it's simple, there we go, and grab this measuring stick, so to speak. Oh, let's give it a couple of weeks. Oh, up into the next resistance area in the low 111. That's a pretty good start to something much, much, much longer term bullish, in my opinion, because remember, we're dealing with a broad double bottom in the bonds and the notes. This is coming up away from the big formation. Bottom. Next chart. Crude dipping down slightly. Doji, sort of a resting day, if you will. No higher high, no lower low. Net change small. I still think it could dribble back down to approximately 73 and a quarter, 10, 20, somewhere in there. Testing a trend line, testing some support, and then turn back up again. Resistance did stop it pretty nicely, right at overbought conditions also. That's nice. I think I said something about that on the day it happened. I'm pretty sure it did. Next, same thing here. Resistance, overbought conditions, turned it down. Too bad we didn't get a bearish engulfing on that day. So here we are at a new low since. A new low for about over a week. And I'm talking about 2.31 for the bottom of this break, downside objective. And it could drop off a bit more than that, but that would be pretty good. Maybe take a few more days. 2.31. Next, we've got natural gas. We didn't work, a new short sale signal yesterday, bearish engulfing ER red sell signal. And I put a circle around it, and we've got the day trade and so on and so forth. We did make a high today, higher than yesterday's high, and that stops us out of anything and everything that we might have had, which would have been an ER3 scalp that lost a little money, and also the ER3 overnight, which lost about the same amount. And that's it. We're out. Flat. Didn't work. And here we are staying right back up there where we got bumped out of the shorts. Too bad this didn't work. I was optimistic about that. Remember, these signals don't always end up being at the highest high, although they do frequently, and the lowest low frequently, and the highest high frequently, and the lowest low frequently. But they are sometimes during the topping out process or bottoming out process. And we'll see what happens. I still think it's going to come down some more. Gold. New high. Not only that, now we've made new highs, and it looks like we're going to close there ever since November 7th. That's 2 months plus. And we've been for a few days above a previous bear trend line, which was the top of a sideways pennant formation, which these sideways pennant formations are usually continuation formations, and therefore bullish eventually. And when we broke out to the upside a few days ago on January 16th, that was the beginning of this next leg up, which is perpetuating itself. You got to love it. Now, how much higher can we go? Two ways to do this. You measure from the back of the pennant high to the low of the pennant, somewhere right around there. And that's a measurement. And you go from the breakout straight up that same amount. Or you measure from the last significant low, which was back there on June 26th, all the way to the top of the pennant beginning. And that is the vertical from whatever to right about there measurement. And take that, which is bigger than the previous, and measure from the breakout point up. And you get two upside objectives, which I obviously haven't put on the chart yet. I will. We'll see what develops here. Okay, silver. Downward slanting wedge or pennant is still in effect. Today's rally high stopped right at that same line it stopped at 3-4 days ago. It has turned back to a little bit lower on the day. It is not overbought, although it was overbought barely the last time we were approaching that bear trend line. So it still looks like it's rolling over and could drop back down to at least 30.20-ish, or maybe even back down to the bottom of the pennant, which now is going to be in a support area also. Interesting. So I think this could be rolling over. Now, if it closes above the bear trend line, the top of this downward slanting wedge is going to be joining the bull camp immediately. But that needs an upside breakout of that line. Next, platinum. Sideways today for the most part. Right unchanged at the moment. 0.9 higher. When you change to a chart, you need to wait for the next tick for the net change indicator at the top to update. Otherwise, visually, you could easily be off a little. Platinum, major long-term, huge support area, very wide, held a few weeks ago. Now it looks like it's about to push into new highs for a while. Maybe get up to at least 1,001.5, and maybe get all the way back up to 1030. We didn't pick off any bottom per se. I haven't got anything here that looks particularly good to talk about except for major historical support. No signals that didn't even get oversold completely. Close, but that's about the best I can say on platinum. Copper had a great sell signal I showed you a few days ago. We are still short with an ER red sell signal. Worked on the next day, great. Came up a little bit yesterday, no big deal. And almost a new low, and likely a new low close, which is important, today. And maybe today or tomorrow, a new low also. That's exactly what I'm expecting since the sell signal, which was the exact high day so far. We're going to come down, I believe, to at least about 4.20. And I wouldn't be surprised to see it come all the way back down to the support zone at 4.08 to 4.04 area, which would be a pretty good break. Next, soybeans, oil, meal, corn, wheat. I have been talking lately about a long-term bull formation developing. And in a couple of cases like corn, we've almost finished with a great head and shoulder bottom. So what do we have here in beans? Beans made a new low recently, got oversold and turned right back significantly since that low on December 19th, and has a new high for the rally, and that's since the rally high on September 30th. So that's October, November, December, 3 months and a half now that we are in new high ground. And if we make the high higher than the high on September 30th, which is not very far away, then we'll be starting to make new highs since July. And it will be an upside breakout on what I think is a double bottom formation. The second low is a little lower than the first low, which was back in August. So it's not the best I've ever seen, but they're fairly wide apart, and that allows for a little bit larger, higher, lower levels. Unless they were a week or two apart, that'd be pretty close. Then you would expect the price levels to be much closer together for double tops and double bottoms. But this is okay. Okay, so now we're lower on the day. We're not overbought. We were. Yeah, we could dribble around here a little bit. It might even come back down to test the line for a second time, which the first one was just great a few days ago. But I'm still bullish. I'm still looking for higher highs. Could happen anytime real soon. Soybean oil. We've got a minor new low here after getting overbought in a resistance area. Too bad no signal per se. That one was a great one, smack dab on top of the high for a couple of months. And the last green one was almost on the exact low day, a little early in the bottoming out process, but I try my best. And that was a good sell signal, and that was a good buy signal. Don't see anything showing up. That was a great buy signal back over here and here. Anyway, maybe a little bit lower, not too much, but I'm expecting the support area we just touched today to start to hold, and it could have been today's low. We could be starting to turn up now. Wouldn't surprise me. I just can't tell. And it could be off a little bit more for the next few days, week. And just as long as it doesn't take too long and doesn't go too low, I would accept a little bit lower lows for maybe a little bit cheaper buy. But it could have been today already. I can't tell. Soybean meal has already popped up decently today for a couple of days. Now it is on the verge of making a high higher than the highest high since last late October. Significant few months. It came down to the third time, a little bit below this time, but got oversold when it did it, to a huge support area going all the way back to some double bottoms in May and June of 23. So that's proven to be good support back in March of last year, 24. And again, it's proven to be very good historical major support November, December, and January of this year. So we're almost at an upside breakout of this support area holding and producing another leg up and another bull move. That should be, and I'll put the measurement in real quick, from this low to the high level would be about like that. I might be off a very small amount. And then you drag this and you put it just above the breakout point like that. And gosh, it produces 360. Nice. Or 356. And we need the breakout. We're not close to overbought, so we could have that. Wouldn't be surprised. Grains are looking a lot more interesting on a longer term, intermediate to long term basis lately. What about corn? My God, the head and shoulder bottom I detailed for you at the time it was developing, the breakout, the whole routine. That's my habit. Is almost at its minimum upside objective past tense. And that is, again, 494. And what is today's high? 492 and a quarter. Give me a break. Close enough for government work. So anyway, the market has reached, for all practical purposes, the minimum upside objective for this pattern that broke out from its neckline right here. Good. On December 24th, almost a month ago. Great. Now what? Well, it's overbought up against a resistance level, which happens to equal almost the same number as the upside objective. So I think it's either started to top out or it's about to. Right now, it's already down on the day a little bit. And if you make a low lower than yesterday's low, what was that? 482 and a half, and today's low is 482 and a half. Are you kidding me? One tick lower than today's low so far, and we're 484. We could have a bearish engulfing red sell signal by the end of this day, and we're close. New low by one tick will do the job. We might show you, I might show you a bearish engulfing tomorrow because it happened before the close today in corn. Boy, that would be nice if it works real well. Next, wheat. Raw double bottom since last September. It's made new highs now today again since early December. Well, December 11th. That would be a minor upside breakout closing above December 11th's high. And then also we got a little bit higher level on November 21. And now you're talking about new highs for probably at least 2 months and a half, maybe a little more. But we've got to keep got to go up some more. Now we're closing in on overbought, but not quite. We got 72 and a half right now, so pretty close. So I wouldn't be surprised if it sloughed off a little bit slowly, sideways to a little bit lower, and then started to go up again more after a few days, a week or two at the most. But there doesn't seem to be anything here as far as the price activity that's rushing things up or down. Next, cattle. That rushed up. There's a stampede going on. And it's almost a new high ground for the whole trend. I couldn't tell that yesterday's low was important, and it was, because it wasn't at any particular important level and nothing else to help me. So I missed this beginning, but it still looks bullish trend wise, and I'm expecting higher highs, and we'll see what we can do on the next turning point. Cattle, now hogs, sorry, coming down, almost the opposite, coming back down close to support at around 85 and a half, and getting very close to oversold again and in a support area. Now, the problem here is, are we going to bounce again, or is this head and shoulder top, which has been working great, going to continue to go down to its minimum downside objective of about 81.70 or 80, a little below 82, which I do expect perfectly. Why not? Formation, breakout to the downside, absolutely classic. Got oversold a few days later, rallied back up to the neckline, right out of the textbooks, and back to almost new lows. Nothing is going wrong with this pattern so far. So I am expecting the minimum downside objective of 81.70, 80, whatever it is, to be fulfilled, and maybe a little lower. The question is, how is it going to get there from where we are right now? Well, I'm not sure, but relatively steadily, I think. And this I'll come to again tomorrow. Where are we on the E-mini? We are holding right near the high of the day. We have made new highs while I was blabbing away here, starting at about 9:10, 10 minutes ago or so. Looks great. No comment. You guys have a great day and profitable trading to you.